Hey everyone, Brian Bogner and Greg Towner here. And of course, it is time for our monthly 20-minute market breakdown. All right. This is what we're going to talk about. Just dive a little deeper into some things that we're seeing here in the market and discuss and things like that. We always like to start this podcast, though, with just a story of what we're seeing and experience out there in the world and in our daily lives. I'll go ahead and go first, Greg, if that's okay.
Sure.
Mine's really not market related. I just came off a week of vacation last week, and I did one of my bucket life trips that I've always wanted to do. I rafted down the Colorado River through the Grand Canyon, and we camped alongside the river. But I got to tell you, man, the thing that I saw that just was kind of a game changer for me is every night we slept on these cots, and we would just look up at the stars, and I fell asleep every night just looking at the stars. And it
Wow.
really just got me thinking about, like, when I go to sleep at home, I've got a iPad, or I'm checking my phone, I'm looking at this, and got screen time and all this other
Right.
stuff and this and that and this and that. Well, we had no cell phone coverage out there, no Wi-Fi, no nothing, right? So all that stuff was just packed away. And you're just laying there watching the show. You're watching meteor showers and satellites. Anyway, it was just amazing. And it just helped me kind of reset on some things. And that's all I got to share. I don't have anything market related here or economy related, but coming off that, it was just truly, truly, truly epic. So what do you got for us today?
That was great. When you were talking about the stars, I thought you were going to say you came back and decided to switch careers to become an astronaut or something like that. But
I'll tell you what,
that's
when there's
great.
no light pollution, there is a show going on above us. And
Yeah.
you can just sit there and watch it. I mean, we saw the Milky Way every night. It was pretty amazing.
Yeah. Well, I had an opportunity to travel recently as well. My wife and I went up to visit some family in upstate New York and had a couple of kind of business related takeaways, actually. On the drive up there, mostly up I-95, we passed several of those, those large RV sales businesses. They sell anything from little trailers to Class Bs to the monster ones. From what I could see, their inventory was overflowing.
Wow.
I mean, every parking lot was filled. One of them was using side streets to park inventory. So I think, that business took off during the pandemic when everybody got out and traveled. And I think maybe they kept building for continuation of that, and maybe that slowed down. But obviously that was just, a few different spots that I saw. But if you're in the business for an RV, there's a chance you might have some inventory up I-95 a little ways. But, another big one is, speaking with some family, I talked with a cousin who's worked in the live entertainment business for probably several decades now, managing concerts, small to mid-sized venues. And in his region in central Western New York, he said this is by far the busiest summer he has ever seen in his probably 30 or so years in the business. So I don't think that's surprising based on things we've seen and read, but it's still interesting to hear people are getting out there.
And still, like, here we are after Labor Day, and it's still happening. I mean, from my trip, I flew into Vegas and out of Vegas. Of course, flights were full both times. Flew the overnighter back, so we had a couple hours to kill in Vegas. Everything was packed out, packed, people everywhere. So, as we transition here to talk about the market related stuff, people are still, they're still out and about. They're still out and about.
Right.
They're still spending money. They're wanting experiences, whether that's vacations, whether that's concerts, whether that's eating out, whether that's gambling, like I was in Vegas. They are out and about. And, so it's really a difficult environment. It's an interesting environment we're in right now, and the question that we keep getting is, well, should we be bullish here or should we be bearish here? Right. I mean, the market's kind of going down. There's a lot of negative headlines and things like that. So which is it? Are we, how should we be positioned here in this environment? And let's talk about the reasons why you might be bullish or bearish. And I'm taking this right from our monthly viewpoint. Comes out beginning of the month. If you're on our email list, you get this. Please read it. It's quick. It's easy read, but there's a lot of great information in here. But so let's review. Why would you be bullish right now in this environment? Well, we talked about negative headlines, right? The investor sentiment is negative. There's a lot of negative news out there, which tends to be a bullish sign. It's actually a positive for the markets. The consumer is better positioned. Again, people are out, just like we're talking about. They're out spending money. They're out doing things. Their balance sheets are actually in pretty decent shape, believe it or not. Job market, right, is also a big part of that, right? We're not
Sure.
seeing wholesale layoffs in industries or things like that. Of course, gas prices are coming down. That's helping. Corporate earnings are still healthy. So there's still some good things to be bullish. Why would you be bearish here? Well, we still have this war going on, right, in Ukraine, and that's causing a lot of issues there in Europe right now. The Fed, right? We hear about don't fight the Fed. Well, what's the Fed doing? They're tightening, right? They're not easing. Inflation is still high. Now, we believe it's peaked. We don't think it's going to get higher here in the United States, but it's still high. Stock prices, of course, are weak. They've gone down. Strong dollar is also having a negative effect, especially on large international corporations. And then the housing market's starting to slow. So there's some reasons to be bearish. So, I've just made two convincing reasons, right, on each side here. Should you be bearish? Should you be bullish, right? Which leads me to say maybe the question is not should we be bearish or should we be bullish, but maybe the question really is what is your time frame? What are you trying to accomplish here, and how much time do you have to do it? So, Greg, talk to us a little bit about that.
Yeah, I mean, you could argue time frame is probably always the better question, but particularly right now and during times of volatility like we're incurring right now, and a lot of people are bearish and a lot of people are focusing on the negatives. So what is a time frame? But then you got to drill down even further. So I mean, we can mean a couple of different things when we speak about time frame. So let's first just talk about the market itself. If you're talking about time frame, let's start with a very short term. There's some things in the seasonality that investors look at. Certain months tend to do well, certain periods of the year. We don't put a lot of weight in something like that. It's more of something of interest. But we happen to be right now in the September, early October period, a weak seasonal period. Maybe the market has already factored that in with the weak period we recently had. But you could certainly see in this very short term volatility continue. But as we start to look out a little bit more, I've looked at some data that shows markets quite strong in the couple of weeks leading into midterm election periods, and then quite strong coming out of them. So of course, this time could be different. We know how that goes, but potentially shorter term volatility leading into a little bit of strength. But really, when we're talking about time frame, we're looking out further, right, Brian? I mean,
Yeah.
we don't care so much about the next few weeks or few months. We know historically, you're talking about bullish versus bearish, it pays to be bullish longer term, right? I mean, people go into work every day to try to better themselves and their families and ultimately better their businesses and their corporations that they're part of, and their corporations are growing, their stocks ultimately grow, the economy grows, et cetera. So, we think from a market perspective, shorter term, certainly could be more volatility. But as you look out longer term, there's always opportunities for investors to keep putting money into the market, dollar cost average in, take advantage of pullbacks.
Exactly. And we're in a pullback here. And we're still, even though, there's been a lot of negative and things like that, we're still only right at this 20% decline, and I think if we look historically, where we are today, you know, regular corrections have been kind of in and around this area. So yeah, what is your time frame? Okay. And most people that are listening to this right now, and I don't, even if you're a retiree, most people have a longer term time frame. And we tend to look at and this is like 10 years plus is what I'm talking about. And I like to ask
Right.
people, do you think the market is going to be higher or lower 5 years from now? Well, yeah, it could go either way. Okay, what about 10 years from
Right.
now? Oh yeah, it's likely going to be higher 10 years from now. Okay, well then, if you think it's going to be higher 10 years from now, what are we doing here? Okay. Are we using this as an opportunity, or are we running for the hills? So, a lot of times retirees think, well, I just need to hunker down and I need to put my money, under the mattress and hope for the best. And that's not always the best thing either. So instead of answering the question bearish, bullish, I think we really need to be looking at what is your time frame and how should we manage around that?
Right. I think as we drill down to it even more is not just the individual and their overall time frame, but specific pots of their money, so to speak. I mean, maybe
Right.
they have some money that needs to be short-term focused, and they should be defensive with that money, whether
Right.
they're retirees and they need money for, payments, or just somebody that has an upcoming bill. I mean, money market rates are getting better right now. You can
Right.
actually be productive with that short-term money and then invest with a longer-term bullish view with your longer-term money and worry less about that volatility. So individual timeframes, not just market timeframes.
Yeah, and I think a lot of times investors can get into this thing where they think it's just all or none. Like, well, then I
Yeah,
got to do this with all my money or some of my money, or where no, actually, that you've got different buckets within your portfolio or within your assets that we can allocate based on these conditions and based on their goals and things like that. Absolutely.
yeah. I mean, as long as we're on the topic of time frame, let's talk about something we've talked about a little bit in the past. The next 10 years, right? They're
Right.
probably going to look different than the last 10. We've actually said this for a couple of years now. A lot of the things we've been right on, of course, not all of them, but the two big things that I think we're already starting to see is interest rates and inflation, right?
Right.
Interest rates and inflation were low for a long time. You can go back more than 10 years probably. But we think we're already seeing, honestly, that is differing right now. Interest rates are up, obviously. Inflation is up. It's a different world.
It's a completely different world. You're absolutely right. And what worked over the last 10 years is not going to work over the next 10 years. And
Right.
I feel more and more confident about that each and every day. And I think the reason why we're seeing a lot of this volatility right now, quite honestly, is that this change is taking place, right? And
Exactly.
things just don't boom change on a dime. Some things change quick, right? Inflation came pretty hard and pretty
Right.
fast, but other things it just takes time for things to turn over. And let's be honest, most portfolios out there, at least that we see, I mean, not ours, but most out there have been, high growth, big tech type
Sure.
overweights, and everyone's been high five and like, yeah, that was the place to be there. Well, guess what? If you're sitting there right now, it's a completely different story. And I would, so it's we are in a different world. There is no doubt about it. And either you or your advisor, obviously, if you invest with us here at Parallel, we have and continue to make some changes and are rebalancing and reallocating and things like that to reflect that. But you need to make sure that is happening right now, and you're using this to do that. Because if not, we like to say it's not how much money you make, it's how much you keep. And you could be up big one year and you're riding high, and then you don't do anything, and the next year you could give most of it right back up. We
Yeah.
see it all the time.
Yeah, definitely. When we're talking time frame, we're talking investment discipline, investment process, and financial planning. I mean, the bigger picture, not just everybody likes to, what's a hot stock or what's, what's the cool thing to invest in now. I mean, you really need to take a step back and more broaden your view on things.
Well, good. So we've talked about the bullish and bearish. We've talked about, really the correct question we need to be talking about is what's your time frame, and how can we, how do you need to manage around that necessarily? Then should I be all in or out, or along those lines there? So with that, let's why don't we pivot here a little bit, Greg? I know
Sure.
we usually like to close these episodes out with just some recommendations. Why don't you start, and I'll follow.
Yeah, well, I mean, since we're doing a podcast here, I thought I'd recommend another podcast, not quite as new as ours, but fairly new. It's called Plain English. It's by a popular writer, journalist named Derek Thompson. And it's good because it covers, a variety of kind of mainstream topics that are hitting right now. He brings on usually one or two guests that are experts in that area. And he tries to, in a pretty short podcast, maybe 30 minutes, really dig into what is going on with it. Some of them are hot topics, political topics, student loans, recessions, teacher shortages. Those are some of the more recent ones. But he doesn't do it in a political way. He's literally trying to educate people. He does his best to not take a stand or try to have an opinion. I find it educational and able to learn in a way without, much bias involved. So Plain English podcast, I would suggest people to check out. And my other suggestion, I'm going to kind of double down on what I was talking about a little bit ago and add on to it. The corrections that we're seeing now in the broader market, even if you get into bear markets, a lot of people get afraid of them. I understand that. But try to view them as opportunities. I mean,
Mhm.
right? If you go to the store, you love to see a bargain that you can buy. We don't see many of those these days with
Right.
inflation. but everybody loves to get a good price for something. I mean, think back to the financial crisis, 08, 09. I mean, I know that volatility was hard to deal with. I mean, I was co-managing about $1 billion in assets at that time. So I know the volatility that was going on. But what came out of that was one of the greatest opportunities of this generation. Now,
Right.
I don't know if we're going to have an opportunity like that, or, anytime soon, but there's different levels of opportunity. So if you can, try to view corrections, market sell-offs as opportunities and not just something to be afraid of.
Yeah, and it's one of the reasons too why, I do have clients that a lot of times call me, I'm like, well, why do we have cash in the portfolio? Well, because, we don't know what's always going to happen. It's always good to have a little bit of cash in there because you never know when you can pick something up, for
Right.
cheap. And if you don't have that cash and you're fully invested, it ain't going to happen. So,
Yeah.
um, so that's good. And let me tell you, when Greg recommends a podcast, I would take that with very good as a very high recommendation there, because Greg listens to a lot of podcasts. He's always digging and getting more information, and he really does have some really good stuff there. So, well, I got two things here. The first, of course, is kind of just following up from my Grand Canyon trip. My recommendation is go visit a national park. We
Yeah.
have just an absolute amazing thing of national parks here in the United States, and they're and I usually go to at least one a year. Usually I'm multiple a year. And a lot of times I go out west because that's where a lot of the really cool ones are, but there's some great ones here. I mean, Smoky National Park's right in our backyard, here in South Carolina. You've got just going up the East Coast, you've got them as well. But go to a national park. They're a national park for a reason. Okay. And there's in season and out of season. I always like to go out of season to a national park. Now, granted, I was just at Grand Canyon in season, and it reminded me why I like to go out of season. There's a lot less people there, and there's just amazing things to see. And the only thing that keeps you from going to a national park is you got to schedule the time to go. Just do it. You obviously got to get there, but getting in and out, there's typically it's not that expensive to do that, and they're just pretty amazing. So, if you need any advice on national parks, I'd be happy to share. Just shoot me an email, and I'm happy to share all my experiences and things like that. And my last recommendation is this: we've been talking about time frames. We've been talking about being bullish or should you be bearish here and what you should do, but I think it's just I really want to hammer the point in that we're in a new environment and it's a new world now when it comes to investing. And if you don't invest with us and you invest with someone else, then I would say go to them and say, what are you doing? How are you repositioned? How are you handling this? What's going on? Help me understand. If you don't get the answers you like, give us a call. We'll be happy to help you, because we're certainly doing those things and making sure that that we are positioned in this new environment and new world that we're in. As always, you can call us, email us. You know how to reach us. Greg, it's always good seeing you, and
Thanks,
everyone.
Brian.
Thanks so much. Thanks so much for listening today, and we will see you next month.